the break of the 20-day moving average is important. There's a lot of money sitting right there at the 20-day moving average. That was kind of a lot of stop losses, a lot of support. So that's why when we saw that break on Friday, it was a big liquidation. Lots of stop losses sitting right there at the 20-day moving average. But we need to get back above that by Friday's close. If we can get above the 20-day moving average, then this kind of bullish trend will be intact. This break will be negated here, and markets should continue to kind of advance further from here. Here's what you need to know before the bell. Technically, the market's doing very well here. We're seeing retail buyers step in. They're buying the dip as expected. We came down on Friday, of course, as we talked about yesterday. Had that big candle, touched the 50-day moving average, rallied back to the 20-day moving average on Monday. Didn't quite get above the 20-day. Yesterday morning, as we noted, we opened down fairly sharply yesterday morning, but then we got the announcement from Jerome Powell about potentially reversing QT, and that gave the markets a lift, and we came right back off that 50-day moving average. So we've had a double test now of the 50-day moving average. So kind of trying to cement that support right now at the 50. And what we haven't done yet is get above the 20. However, this morning, futures are pointing decently higher. So there's a very good probability that we're going to climb back above the 20-day. Now, as we talked about in our daily market commentary, this is important because the break of the 20-day moving average is important. There's a lot of money sitting right there at the 20-day moving average. That was kind of a lot of stop losses, a lot of support. So that's why when we saw that break on Friday, it was a big liquidation. Lots of stop losses sitting right there at the 20-day moving average. But we need to get back above that by Friday's close. If we can get above the 20-day moving average, then this kind of bullish trend will be intact. This break will be negated here, and markets should continue to kind of advance further from here. Again, we worked off a lot of that overbought condition, so that kind of gives the market a little bit of lift here as well. So again, as investors are coming in, they're buying this dip. We're seeing that speculative chase continue. We're seeing the same stocks get bought. The Bloom Energies, the Applied Dynamics, those types of companies. That's where investors are piling right back into the same stocks, same trades, the Oklos of the world, chasing that momentum. So as long as this momentum trade remains intact, then the markets are likely going to be fine. And again, we've kind of talked about taking profits, rebalancing risk previously. What we'd like to see here is a little bit more consolidation, work off some of this condition a bit, and then and allow this sell signal to kind of work its process. I don't know if we're going to see that or not, but that would give you a better opportunity to add exposure going into the year end. Now, and this is really kind of the bottom line here, is that we're seeing a lot of buy the dip activity right now. And again, there's nothing wrong with that. There's nothing here technically that suggests you should be selling and reducing risk by any stretch of the imagination. The markets are just fine. They're remaining very well within this bullish trend, but we need to get above that 20-day moving average. If we don't by Friday, or if this market rolls over today, and again, this 50-day moving average is the average to watch. If we take that out, there's a lot of money. There's a lot of volume that trades right at that 50-day moving average. A break of that, you're going to see a lot more supports get taken out and another kind of a further decline in the market. So the next couple of days will be very, very important. And again, the thing you're looking for here to kind of secure your position is we got to get back above that 20-day moving average. So we'll pay attention to that today and see what happens. I'll update you tomorrow when Michael Leibowitz gets here as well. But that's what you need to know before the bell this morning.